Sorry guys. There we go. That was my bad. All right. Okay. I I actually installed a new webcam over the when I got back yesterday, because it arrived 28 days late. That's Australia for you. Anyway, so I installed a new webcam, and I think some of the settings went a bit out of whack. So thanks for picking that up. That is good. All right, so we're going to cover the game plan for the week ahead. We're also going to cover last week's performance and go from there. All right, perfect. So just making sure you guys are good. There we go. Thanks. Okay, so let's go. Oh, I just want to remove this from the side. Okay, so game plan, group results. Let's have a look. Oh, come on. All right, so what was this week that we just passed? It was the 9 to the 13 or 9 to the 12th. All right, so there were some trades taken over there. So not a lot of activity. I think a lot of you guys just took a bit of a break over the week. There was not a lot of activity in the chats over here. There were still some trades running, so thanks for that. Oh, come on. So there were some trades done during the week, some strategies that were run. So good job on that. And we also had the game plan run for the week. We did have not the greatest week with regards to the NQ. So basically, there was our summary for the week. So if you look back on the game plan chat, you'll see that was the summary for the week that we just passed. And I think we basically ended up on a loss for the NQ and the ES, but we saw a profit for the MNQ, for the 9 a.m. to 11 a.m. template. So a lot of you guys are still running the MNQs, which is very good because you've got multiple accounts. You might be copying those trades to multiple different accounts, but all of those are basically listed in there. And I see on Friday, some of you guys did run the strategies and were successful with that. So good job on that. Okay, so that's as far as the results go. So we are looking at the week ahead. So the week ahead is basically 16 to 20, okay? But on the 20th, it's also contract rollover. So we actually have this week over here leading up to a contract rollover. And then literally from the next week, there's going to be absolutely no banking or institutional trade activity happening. It's going to be a complete... there's not going to be any professionals in the market, basically. There's just going to be a whole lot of people that are just messing around. People on their 5-minute bars, people playing around with their 15-minute bars, just trying to work things out. But there's not going to be any professionals trading at all in the market. So because of that, and leading up into the contract rollover, which is the 20th, we need to be very, very, very careful this week. In fact, if you don't need to trade this week, or you can just do a little bit, then that's probably more advisable. But literally from, like I said, contract rollover week. So there's going to be a lot of very sporadic activity, I believe. And then obviously next week, leading up into Christmas, there's nothing happening there. The following week is going to be 30, 31 first. I mean, there's nothing happening there. So the very, very first time that the banks and institutions will be getting back into the markets, I would say, is the 6th of January onwards. And even then, it'll be a slow jump in. So 6th of January, I would say most of the banks and institutions will be back at work or back into the full swing of things from the 13th of January. So we basically almost have a month of activity where we're not really going to be very productive. there's going to be a lot of YouTube videos and gurus saying, "Oh, this is the best time to trade," but it's absolute bullshit, because you're not trading with any of the professionals. So the market activity is going to be completely out of whack. So that's just something to pay very close attention to over the coming weeks. If you do want to enter some positions, of course, you still have the signal charts, just for some scalping trades. But I will also run the game plan for the week ahead, just because it was prepared, and it does, but I've been quite conservative on it too. So if I go and load the workspace for the game plan for the week ahead. Oh yeah, so while I'm mentioning this, when you guys are running your strategy optimizations on the new assembly, just untick the box that says pause, resume all link strategies. So if I go into the new strategy analyzer, you'll see over here on this specific strategy, and it only applies to the optimization. So when you're running the baseline Wick trader and running the optimizations, just untick this pause, resume all link strategies when you're running an optimization. And when the charts are running on, when the strategies are running on the charts or chart lists, you can tick this box again, and then the strategies will work accordingly. It's just when you're running optimization on historical data that there's something with the buttons that are in the background. Now I am going to look at this immediately after the call, so just keep an eye out on the announcements tab. But if you are running optimizations, literally the only thing I'm going to be looking at is just seeing why we're getting some sort of an unhandled exception error, and it's just related to buttons that are not active on a chart. That's all it is. Okay, so let that be. So with the game plan for the week ahead, we'll look at that very quickly. Let me just check something here. All right. All right, so we've chosen again the 4 templates, and you'll see that template 1, I've still kept it as a 40-20 for the MNQ. But on template 2, I've converted this back to a 50-30 bar, and on the NQ a 50-30 bar. So those are the 2 bar sizes, the differences between last week and this week. So you're going to notice that is in there. I just want to move this chat over to see if there's any questions while this call is on. So I'll monitor that in the background. Perfect. And thanks for picking up the sound issue there, Bruce. All right. So there's our first template, the MNQ 40-20. So I ran all these optimizations last night after I put in the new assembly. I did have that unhandled exception error, but I honestly thought it was just on my side. And then I ran all the rest and they were fine. So there's our first template for the MNQ. And that's what that one looks like. We also have our second one, which is the 935 to 1120. That one's got a 400, 600, 600 in the settings. You'll see it's a more of a conservative template. So I'm really trying to pick out the trades where, the price moves in that direction, quite extensively and then enters. So I'm trying not to get as many positions as possible with this template, just because I'm, very skeptical of the trading week ahead. So I've made the trades a little bit more out of reach than what they would normally have been, but still showing good results. The NQ, I've done a very similar thing over there. You'll see over the period of time, we've just basically got, very few trades that have been entered. So we're going to see how that runs. And I mean, for this week ahead, if you can make $2,000 and, stop there, whenever that happens. And even if you drop by $2,000, I mean, if you have a drawdown of $2,000, just cut it off, because then you obviously know that the market is, all the big players are out, or there's such huge manipulation going on that, it's not even worth being in the market. Okay, there's our ES1. Our ES1, has been okay. with the NinjaTrader bars. So that is in place too. And there it is there. So those are the 4 terms I'm going to be running this week. So we'll see how they go. Okay, nice. Now, what I wanted to cover on this call was a look at our daily range indicator. So you're going to notice I've made a slight adjustment to the daily range. So if you go into your indicator settings, so first of all, if you want to follow along, what you can do is you can load up a chart. So go to like MNQ or NQ chart and load up a 250 flat baseline chart with 45 days on the chart. Okay, we're going to load 45 days because what we're doing is we're looking at historical activity, and then we are measuring, what the tick ranges are of that. Okay, so the big difference I've made over here is I've actually changed the tick. I've changed the values into tick values instead of point values. So you'll notice that, these are the ranges of price over the previous historical trading day. So we're going to cover this in another call early in the new year because it's such an important, powerful tool that nobody is talking about. I mean, you can watch 100 YouTube videos on, range of price, and you're never going to have anything as informative as what, when we speak about this indicator in depth. But basically what the daily range is, view it as a kind of a racetrack for the banks and institutions to be riding on. So everybody thinks that the price just goes up and down and there's no control over it. Well, looking at historical ranges, you can see that the price fills in like in a certain average range. It doesn't just shoot up like, 2,000 ticks one day and then 500 the next day and then 3,000 the next day and then 2,000 the next day. You're going to have quite a steady flow of range. So this is basically where the banks and institutions are trading within. Now, there's no proof or evidence, there definitely is evidence, but there's no proof that the daily range is controlled. Like, the exchange isn't saying, okay, guys, all the banks, we are going to work within this very specific range for the next week or 2 weeks or 3 weeks. So that's not publicly available, but, you're going to have banks and institutions understanding what the average range is, and they're going to find liquidity within that range. As soon as they're trying to go above that range, or they're like really going against that daily range, there's not a lot of liquidity in that range because it's new territory. So every single day they're basically working within a range. Now these dots that you're seeing on the screen, that there is going to show the average daily range. So whenever the day starts, you're going to see basically the red and the green, and that's going to just show you from the open what the expected range of price is going to be. Now, it doesn't mean that it's definitely going to go and touch those extremities, and it's also from the start of the trading day. So I've just done it like that, just so that you can see, where price is. And, very often you're going to notice that, price is going to come and, hit an average daily range sometime, after the 11 a.m. time. So you're going to notice on the chart here, you've got pink highlighted candles. And what I've basically called this is the point of no return. So generally during a trading day, when the trading day starts, you're going to have, the price running, but like here's the beginning of the trading day, and this is a larger candle, okay? So it's a 250. But generally between the 9 a.m. and 11 a.m. period, the breakout after that is generally where the price is going to go for the rest of the day. or at least provide a 50 tick opportunity to enter positions. So as soon as you have a breakout after the 9 a.m., so all the candles between 9 a.m. and 11 a.m. are basically listed over here. As soon as you have a breakout of that, there's a very high chance that entering a limit order on the next candle at the beginning of the next candle, actually not the beginning of the next candle, on the 50 mark, because obviously the price is going to go and form a new candle, and that's where that candle is going to open. But then what's going to happen is the next candle, if the price doesn't continue going up, is going to come down and it's going to form a new candle over there. And then the very, very next candle is going to start over here, and that's going to go up. So this is a good way to get like a 50 tick profit target with a, because we're entering over there, and then having your stop there. So it's a slightly larger stop and target. So like a 50 target with a 210 stop. So exactly where the price would need to go to break to the previous baseline. So generally you're going to find that is happened. So you can scroll back as far as you want on the chart, and we'll even go to the back here. You'll see over here. So there's the 9 a.m. to 11 a.m. Okay. There was the breakout. There's your trade. There's your target. And this is just targeting a 50 tick target. Okay, so that's the 1 day. Here's the next one over here. First breakout after the colored bars. Enter a position, profit target. And that's 50 ticks. So it's basically the start of that candle to the next one. There's your breakout. This specific one over here, you can see it went up over there. It only went a slight up. So this specific one would have been a stop out. Okay. Going back to the following day, you've got the exact same thing over there. There's the 9 a.m. to 11 a.m. You got the breakout, and you got your position. Now, you could enter, multiple positions, on that candle, predicting a baseline break upwards, because, as you can see, often after that baseline break, it kind of can float around that area for a while before it breaks again. So, even if you have a losing day, like over here, you could enter like the following days, enter 2 positions in that thing, or, enter multiple positions in that direction. And this is just on the MNQ. It's not even on the NQ. So same thing over there. You got your 9 till 11. So we've basically highlighting the 9 till 11. The very first breakout after that 9 till 11 is this one over here. And that's giving you direction for the day too. So then you've got your opportunity over there to enter your positions with your targets. So it's very interesting seeing this, because I have seen a few videos of people in the past saying direction is determined by after what happens between 9 and 11. Well, they've got some of that right, but a lot of them don't understand why that is actually happening. So this highlights it a bit better. So to give you the opportunity of, entering those positions, waiting for that breakout after the 11 a.m. So there over here, that the first breakout of that is this one over here. So a break up, see, because that's a colored bar still. So this is still the 9 till 11. So break up, there's your entries. There is your 9 till 11. The first break out of that range is over here. There's your profit targets. Same thing over here. You've got your 9 till 11, your very first breakout. There's your trades. So it kind of happens, like I would say 9 out of 10 times, where you have your 9 till 11 a.m. period. Then you have your breakout, and then go from there. So, you could also decide to chase a much larger target on this, or even just have multiple entries with multiple targets on them. But very, very interesting to see this. And I mean, you can literally go back as many days as you want, and you're going to see this kind of a repeat every day. So there's your 9 till 11. There's your first breakout, profit target. Constantly there. This specific one over here, there was your first breakout. The price didn't actually return over here, so there would not be a trade over here. You wouldn't have had a trade. Hey, but maybe the next one. That's up to you. There's your 9 till 11. There's your first breakout. There's your trades. So, like I said, I'm just going through the available data that we have on here. And you can see it's pretty consistent. It's pretty consistent with that. So yeah, I'm just highlighting them all just because it's so clear. And this is, you're looking at larger bars here, right? You're not going to be able to see any of this on 5-minute bars or any of the other filtered bars that you might be looking at. So the next one is over there. So we're almost at the end of we just looked at the last 45 days, right? Okay, there's the next one over there. So, I mean, it's beneficial because it's actually highlighting the coloring of the bars. So there's your next one over there. There's your next one over there. And then this leads towards the end of the day. So I mean, I can create an automated strategy for this down the track, which I will do. I just don't see it as a priority right now. Obviously, we had a few days where the market cut off early, so that was that. But you see how amazingly well this repeats. I mean, we have it almost every single day where the chance of that actually being successful is so damn high. Cool. So, and it even happened on Friday. Actually, it didn't. That's not what we were highlighting. We were highlighting, the breakout after that. So we didn't even get to that because, the market had closed before that. So, that is just looking at that. Now, what could also be of huge benefit over here is going into your indicators and adding in a Fibonacci levels, because often what the Fibonacci levels are going to tell you is where those points of interest are, where the institutional support and resistance levels are, and that can definitely help you also, be sure of your entries coming into it. So I'm just going to disable the 5-minute one because we don't really need to see the 5-minute Fibonacci on the longer period bars like this. So we'll give us a moment to calculate. And I would like to cover this a lot more in detail. And I want to go into the science behind the daily range, like I mentioned, the racetrack for, the banks and institutions where they comfortably trade within, and why, they're very unlikely to go over specific ranges. So that will definitely be for another call. But isn't it fascinating looking back at the tick values for these ranges? So 782, 881, 868, 814, 882, 908, 938, 921, 975. So you can see quite clearly that there's kind of an understanding amongst the banks and institutions of how far they're going to push the price in a single day. And, these values are, they're working off institutional support and resistance levels regarding the range. So they basically know that from certain points of interest, they're going to push the price certain amounts of ticks in that trading day to stay within that range of liquidity. Okay, so Often, I mean, I know looking back, you can activate your plots for the Fibonacci levels only, but, these are going to give you a really cool insight into price. But, even with that very, very, very simple approach, all you have to do with this manual trading strategy that we just presented here, all you have to do is look at your computer after 11 a.m. So look at your charts after 11 a.m. and you can even put in a marker. So you can go and draw a line on your chart. So say, for example, this is, the day that you're trading in. You come to your computer at 11 a.m. You see the price is on a baseline. You can actually draw a specific marker on your chart like this, and then you are able to go and create an alert for it. So you can actually create an alert for if the price touches that level. So, you would draw a line over there and you would draw a line at the next value. So the next value, if you're either looking for a price to go up or price to go down. So, you can put your tick distance marker on there. So that's another thing that you can look at. You can look at your indicator for your tick distance marker, or you can very simply just do the value. So that's going to be 200 ticks, and that this is going to be 200 ticks. So that is the value that you are looking at drawing your marker on. And that as soon as that price touches that 200 tick value, you can actually create an alert for that. And then that'll just give you the opportunity to go and, to be at your PC. And then once you get that alert, you basically set your buy limit or your sell limit at 50 ticks below that, and then have an ATM attached to that specific order. Then that trade's either going to hit its 50 tick target or its 200 tick stop. So, that's like a good way to work with this. And then, after that position, you can decide whether to continue entering. I mean, you might be at a strong Fibonacci level. So as an example over here, you will see that, okay, this price has hit new levels over here, but you may be between, like here's the 76 and the 50. Okay, this wouldn't have been there because this hit a new high. So that's why this is so high up. I just want to check that. Yes, that's correct. So there are other levels in play. You've got a few different Fibonacci levels in play. So there's a good chance that the price could bounce around those levels before it finds direction. So very often you can get multiple trades while the price is running a baseline. So one of the awesome benefits of having a larger bar chart like this, and then you can also look at any other instrument. So you've got a lot of different instruments that you could look at, and seeing how the daily range is moving, and then during that day, as if the price is coming towards like early afternoon, that if the daily range has already been met and the price is at the low or the high of that range, that there's a good chance of price reversing because that range for the day has already been met. But I would like to cover this indicator in a bit more detail and bring in some information in the back end regarding it. But I thought that this is just something nice for you guys to look at and review. I know we discussed this a few years ago on on one of our group calls, but since I've updated the tick values, now you're going to see it's going to be a lot easier to read and understand. So again, we've got our green dots and our red dots. That's just showing you the average value in ticks. So, and it's going to plot from the beginning of the trading day. So it's not going to show the high and the low of the price. It's just telling you that, expect the price to be, within that range. So there was 1,011. There we had the price, go up. There's 1,000. the end of there's the end of the trading day. It basically matched that value. So, they're going to work off, a specific price range, and that's what they do all day, every day. They're going to fall within that range. So we know, as an example, that for the current day ahead, we are going to see we know the price is going to move at least 963 ticks, within that day. So ups and the highs and lows of that trading day. Cool. All right, so guys, look at the game plan for the weekend, and like I said, if you can just achieve some results from this for the week. So I'm going to let it run the whole week, Monday, Tuesday, Wednesday, Thursday. But as usual, all you do is you go into your templates and you go load, and you load up your first template as to match up the game plan, and it just a nice, easy, simple way to trade the strategies without knowing or having to know too much about them. Okay, so again, obviously match up your results to make sure they match up with the game plan, and then you are set. Okay, so that was about all I needed to discuss today. There's not a lot of confidence in the market going ahead, especially for the next few weeks. So this is going to be our last group call for the year. So I'm not going to have a group call next week on this 22nd. So, I hope you guys have a really awesome, festive season ahead of you. Spend some quality time with family, and definitely spend some time, reviewing the different tools, the different indicators, because, you want to start the year, whether it's the 6th of January or the next week. You want to be able to start the year with a very, very good understanding of this incredible system that we have over here. There's quite a few tools that you can review, especially now looking at the average daily range. You got some good indication of, what that looks like. You might come up with some really smart ideas on how to make that work for you. And look at different instruments too. You might even create signal charts. There might be specific times of the day that you would like to, to evaluate. I know for MNQ and NQ, it's the 9 till 11. That's the period of time. But, in your strategy, in your indicator settings, you actually have the option over here to be able to highlight very specific times of the day. So this one here, I've called it the point of no return, because it doesn't return back to there, as you can see. But that shows you can select specific times of the day. You could even select the trading day. So there I've got 1 to 20, but you can go in here and you can go 1, 5, 10, 15, 20. I mean, you can literally choose any specific values in there, and then that will actually show you those specific values. And you can go longer. So if you want to go the last 50 trading days, you can do that. All you have to do is put them in there. So you go 1, 2, 3, 4, 5. I mean, you can put as many values as you want in there, as long as you've got your data series on your chart to load the amount of trading days. So this is calendar days. So NinjaTrader works on calendar days, not on trading days. So that's why I've got 45 days for 30 trading days, because you need to add more. So you can add a lot more days in there. You can add a lot more data in here. It'll give you a really good average range, and then you can see what price is doing and how it has performed in the past. So you can spend hours on this. I mean, you could literally spend hours on this, and the amount of information you'll get from this is far beyond anything that you will find relating to price movement, where the expected range of price is going to be. of the banks and institutions, because as I mentioned at the beginning, they're not just going in blind, right? The banks and institutions are not looking at 5-minute bars or 10-minute bars. They're looking at price points. They're looking at ranges of price. So they're evaluating things on a much bigger scale, whereas most people are looking at stupid small minute bars, and not actually seeing a bigger picture. So this shows you a much bigger picture of what price is doing, where it's likely to go next, and where the ranges are that the banks and institutions mostly stay within. So it's like a band of price. Cool. And that's it. So thank you guys very much for jumping on the call. We will have our very next call on the, I'm trying to decide over here. So I would say in January the 12th. I'll just check the Discord channel. So just check the Discord channel for any alerts in there or notifications. I'm going to just do some work on the strategies over this break too. I'm going to take some time off, obviously, for a reset, but I'm also going to be doing some really powerful updates to the system. And, we're going to go from there. So, we've got a very exciting year ahead of us with the automated strategies, with the different signal chart. So there's some really powerful things coming. And, for those who really commit to the DTB system, for those who really use the system and, spend time understanding it, you're never going to look back. Okay, guys, thank you so much. And, have a good week. And, please pay attention to the, the Discord chat for notifications regarding new updates, new assemblies, and we'll go from there. Okay, guys, thank you and cheers.